Picture this. Picture willingly going to an organization and telling them, hey, tie me up. Tie me up for 30 years. And the only way I get untied is I'll pay every month for that 30 years until the 30 years term is over. Not only that, but the payment is going to be related or interlocked with interest rates, all right? And every year, 2, 3, 4, 5, I'll come back to you willingly tied up, and we will renegotiate the interest rate. And it could be up or it could be down. And let's face it, nothing really goes down. I've been alive for 35 years now in my life. Prices don't go down. Whatever goes up stays up in this scenario, right? And then picture the bank goes like, okay, but the rope costs $500,000, and because it's interests and it's 30 years long, by the end of the 30 year, you'll be ending up paying to us, the bank, $1.5 million, if not 2 million. And picture willingly nodding your head, picking up a pen, and signing on the dotted line. For me, that's what a mortgage is. Let's start by explaining what a mortgage is, okay? So, like the actual definition. Mortgage is a bank gives you a loan to buy a property, right? You want to buy a house. The house costs $500,000, $250,000, $250,000. If it's a condo, $350,000, $750,000, whatever it is. Let's just choose $500,000 for the sake of it, right? Nobody has $500,000, so they go to the bank, and the bank gives you a loan to purchase the house. The house is collateral, which means if you miss payments or if you can't pay anymore, they take away the house from you, and whatever payments you made, guess what? You don't get it back. No backsies. There's no refund in this bullshit. All right? And unlike other places, I only realized this when I worked in the Canadian bank. In America, for example, when you go get a mortgage, whatever the rate is that you started the mortgage, let's say it was 3.65%, for 30 years, that's the rate. That kind of makes much more sense than the Canadian way, which is you get the mortgage on term basis. So there's like 1 year, 2 year, 3 year, 4 year, 5 year fixed variable. I don't want to get into the whole weeds of things, but after the term, you come back to the bank and renegotiate depending on what the interest rate is at that time. It could be higher, it could be lower. And like I said, usually it's always higher, right? So if you started the mortgage and like in COVID, I heard the interest rates were like 1 point something percent, and they take it for 5 years fixed. And after 5 years, it's time to renegotiate. And guess what? Now the interest rate is 3 or 4%. So what you could afford 5 years ago, now you can't afford it anymore, right? So basically that's what the mortgage is. And another thing you guys need to understand, depending on the type of the mortgage, convenient mortgage, whatever, or the other ones, I'm not going to get into the weeds of it. At the end of it, most of your money that you're paying on the monthly basis is actually going to interest. Whether it's from the beginning, whether it's at the end, eventually most of the money for 30 years that you're paying goes to the bank. Okay? Now why? Why would someone do that to themselves? Apparently because it's a dream. It's everybody's dream to buy a house. And I don't know why or where this dream came from. I wasn't there in this meeting of what should the dream of everybody's world be. I wasn't there to choose that, hey, everybody should have the dream of owning a house. Like, why is that the main dream of, why is that the main goal of your whole life? Well, who made that a dream? If everybody has the same dream, then someone implanted that in our heads somehow. And why is it a dream? Like, what's wrong with renting? I think renting gets a bad rep. And then people will tell me, no, instead of, people first will go like, renting is expensive in Canada. Oh, so mortgages are cheap? You think a mortgage is cheap? You think property tax is cheap? You think if your air condition breaks down, or the fridge breaks down, or something needs maintenance in the house, you think that's cheap? You think condo fees is cheap if you're purchasing a condo? So the idea of, oh, rent is expensive, so you're gonna choose a more expensive thing for the expensive, like, that's one point. Another point people will say, will go like, well, at least if I'm paying rent, if instead of paying rent I pay a mortgage, at the end of it I'll own the property. But do you? Now, before I get to do you really own it at the end, it's 30 years. Do you know if you can do this for 30 years? Do you know what's going to happen in 30 days? Or in 2 years? Are you still going to have income? Economy is weird. Stuff, weird. Life happens. You lose a job. You don't have income anymore. You can't pay your mortgage anymore. What do you think the bank is going to do? They'll call you and go like, hey, buddy, don't worry. This one's on us. No, my friends. They're going to take away your dream. They're going to take away your house. And they're not going to pay you a cent back. Right? And then let's say miraculously, somehow, you survived 30 years and you paid it down, and now you have your dream and it's your property, your house. Do you really own it? If you think you really own it, stop paying property tax for a while and see what happens. See who comes knocking on the door and takes your dream away. So at the end, my question is, do you really own it after 30 years? Right? This is the part of the video where you might be thinking like, I'm gonna be like, okay, so a mortgage makes sense if this or if that, or if, honestly, no. You guys are not gonna, most of you might not like this answer. This is my personal opinion. Mortgages is never a good idea, right? If you need a mortgage to purchase a house, you can't afford it. If you can't afford it, don't do it, right? Buying a house for $500,000 and ending up paying $1.5 million or not, or more, up to $2 million to the bank, just to the bank in interest, doesn't make sense to me. People get laughed at for getting a lease or finance on a car for I don't know how many couple of years, 5 years or a decade, for just $60,000. People get laughed at. But a mortgage is fine. 30 years mortgage is just normal. I don't know, like, I don't know if I'm the one who I can't see it, or if I'm making sense. I really have no idea, right? From my personal perspective as working in a bank, I get clients sometimes who want to do a bank draft of like $30,000, $60,000, and it's going to a realtor or whoever it is. It's going to a lawyer, so I know they're purchasing a house. So I go like, "Oh, you're purchasing a house?" And they tell me, "Yeah." So I tell them, "Congratulations," and I wish you guys can see their faces. All right, 90% of the time, their face when I say congratulations, because it's your dream, right? You're purchasing a house. You can see there's a little bit of misery in their faces. They sigh. There's a slight sigh. There's a slight inhale, and they're shaking their head, and almost like they want to start venting. They almost want to tell me like, "Oh my God, I'm making a mistake," but they just end up going like, "Oh, thanks," because it is what it is. Now it's kind of too late. I guess they already signed the dotted line, right? I've never seen someone happy putting a down payment for a house to get a mortgage. That's one thing I've noticed working in the bank. 90% of the time, people are just like miserable doing it. And then something else also while working in the bank that confused the hell out of me is there was this lady who, that's it, she reached the end of the mortgage thing, she has like 30,000 or maybe 60,000. I don't remember the exact number. Maybe it was 40,000. Let's assume 30,000. She had 30,000 just to pay off the mortgage, and then that's it. It's hers. The dream that she worked for 30 years is done. She can own the property, technically own it. And she has investments in her account that has 30,000 and even more than 30,000. So even if she takes the investments from 30,000 and ends this ordeal, this mortgage ordeal, she'll still have money in the bank. But then here comes one of my colleagues, an investment advisor, and he didn't just come and do it like that. She herself was wondering. She's like, I'm not sure if I should pay it off or if I should extend it. And when she said that, my brain just went like error mode. It's just like, what's going on? And then the investment advisor, he's like, I'm a number guy. So then he started puncturing it, and he's like, you know what? Maybe it makes sense if you extend the mortgage 1 or 2 or 3 more years, and instead of paying the 30,000 to end the house, you put it in another investment and make more money. And I'm just sitting there going like, yo, what the hell's going on? Like, why would you want to just end it? You're there, you're in the finish line. Why are you extending the finish line? Why do you want to pay the bank 1, 2, 3 more years of interest, right? And what the 30,000 mortgage, the 30,000 that could have ended it, you put it in an investment so that you can be making more, but then you're paying interest more for 3 years to the bank. Like, nothing made sense, right? Like, maybe on paper, okay, you'll be making more in investments, but then in investments, can we really guarantee? Because GIC is the thing that we can guarantee. The interest rate is bullshit. If it's mutual funds, we don't know what's going to happen in the market, so she could even lose a big portion of that 30,000. So in my head, I'm screaming, just end it. Just take out 30,000 and pay off your mortgage. It's over. You reached. Congratulations. You somehow made it. A lot of people are not able to make it. But no, it seems like this country is addicted to interests, and they just love paying banks money. I don't know. Maybe, again, if this is something that I'm blindsided about, like, am I not seeing it clearly? Leave me comments if you think, you leave me comments of what you think about this opinion, right? In this situation, would you just pay off your 30,000 mortgage and get it over with, or would you extend a year or 2 more and take that 30,000 and invest it? I mean, you were already investing it, so it already made you money. But like, tell me what you would do in this situation. And let me leave you with this last point. All right, every Monday we have a sales meeting in our branch, and I remember this Monday the branch manager was like, this 1 month, this June, for mortgage renewals only, $90 million. 1 month, one branch, not the whole bank, just our branch for 1 month made $90 million on mortgage renewals only. And the first thing that popped in my head is, then why the hell are we making clients pay for checking accounts? Because in other videos I explained about the paying checking accounts. Some people go like, oh, even banks need to pay bills and whatever. With $90 million, if you think $90 million is not going to be able to pay off the bills, how much do you think bankers are earning yearly? $1 million each? So it's just like mortgage. I think mortgage is just, banks are the ones that earn it, right? If you have enough money to purchase a house downright, go for it. If you have $250,000 to purchase a condo, go for it. If you have $500,000, go purchase it without a mortgage. If you need a mortgage, you can't afford it, don't do it. Renting, there's nothing wrong with renting. But one of the things that I love about renting is I can just get up and leave. I can just go like, hey, I don't like this place, I don't like my land. Sometimes people go like, oh, I don't like my landlord, I want to leave. Or I don't like my landlord, so I want to be my own landlord. Your landlord is going to be the bank for 30 years. You think the bank is going to be a better landlord than your current landlord? Anyways, that was my personal opinion. I would love to hear what you guys think about this specifically, because I know this is going to be a weird topic, because there's a lot of people who think mortgages are a good thing. right? Leave comments. I want to hear you guys' opinions about it. Leave a like button if you like what you heard. Share it to someone who's thinking about getting a mortgage and is not sure. And until next time, my next video is probably going to be about RSP, Registered Retirement Savings Plan. So stay tuned and stay debt free.